Good evening, everyone. Welcome to the One Finance Masterclass. My name is Sonam Khatri. I'm an AVP Marketing and Communications here. These masterclass are designed so that you can benefit from a specialized program led by qualified financial advisors that help you or empower you to make informed financial decisions, especially towards your personal finances. This masterclass is right now live on the One Finance website, on LinkedIn, and Twitter. You can watch it on whatever platform you're comfortable more with. Throughout the whole session, we will see to it that this masterclass is engaging, and any questions if you have will be taken care of in the last 10 to 15 minutes. Today's topic is, why do you need a financial advisor? From planning to prosperity, these financial advisors support us in our complete financial journey. Today, we're going to discuss whether you really need a financial advisor and how actually they can help you in going through the complex world of personal finances which are impacted with major things or multiple things, and how these financial advisors stand by you through the complete journey so that your journey is comfortable and not too much of a turbulence. All right, so today's speaker who's going to take us through this session, let's introduce him. Today with us is Mr. Apurva Singhi. He's a founder and educator at House of Financial Planners and Siddhanam Capital. He has around 12 years of experience as an independent financial planner. He has around 100 clients where he manages their finances, and he specializes in mutual funds, peer-to-peer investment, and portfolio management services. Welcoming Apurva. Thank you so much for joining us today.
Thank you for giving this opportunity to help so many of our listeners who are listening us live today and later the ones who will visit this recording. My objective today would be to help people take a decision. That's it, period. Before that is too late for them. So that will be the core agenda, and that's where would be my kind of narrative for next 20-30 minutes that I'll be there live with you.
Perfect, Apurva. Thank you so much. Our listeners are looking forward to this session, definitely. We are live right now on the social media
Okay.
platforms also. And this is a platform where usually it's discussed in a simpler way that you just need a financial advisor, or why do you need a financial advisor? If you want to give it a start to today's session, what will be your one line statement that do you really need a financial advisor, or you definitely need one?
See, even the best players in the world will have coaches. The coaches will not be playing better than those players, but still they all require the coach that will improve their games. So even though you would be somebody who understand the finances towards in depth, but still I would always recommend that you have an advisor. You have the an external voice which is there who can take care of or who can give you a view which is beyond your own view. Hence we all require a financial advisor the way we all require a doctor.
Perfectly put. Yes, everybody needs coaches. They experience, they're specialized in their field, and you need them to handle your personal finances. Apurva, let's get started with the session. Let's first take a poll. All can engage towards this poll. Before we get started, I'll tell my team to just show us the poll now. All right. So, who has had the most significant impact on your major life decisions? Who has had the most significant impact on your major life decisions, your family members, friends, your qualified financial advisors, or your mentors, or your teachers, right? So your life decisions today are taken, and you always go to your friends, you go to your family members while taking any decisions. When it comes to even your finances, you end up taking a lot of ideas, views, suggestions from here and there. So if you have been taking major life decisions, who are the people who, like, significantly are helping you to take them, or you're impacted most by them? Please put your vote over there so we can take the answers and take this session forward. Let me just check how many people have replied for the same. All right, yeah, 57% say that family members are the ones that are the most significant impact. Obviously, family is somebody who's the first voice, right? All right. So when it comes to financial decisions, should family members be the people taking or be the one really impacting those decisions? Apurva, what's your take on that?
I guess you, I mean, though everyone has their beginnings wherein they start taking the advices from their parents because they have seen the world. But again, once somebody's starting, it's always good to have a parallel professional advisor who can help them apart from their own parents or their friends who are also advising them. And over a period of time, you yourself will figure out that what is actually good for you. So as a professional, I would always say that we all begin with the advisory of our loved ones, from our loved ones, but a professional advisor will always add value which your
Absolutely.
family members will not be able to.
Absolutely. Let's get the session started. This sets the base for it. Apurva, all yours.
Thank you. Thank you. So, like, I would like to begin with a small story, which, like, I remember when I was little, I was told this story to kind of explain a very simple, you can say, a very simple context to a problem that I was facing at that point in time. And I kind of remembered this thing, and I would like to share this with you all today. So, there was once a small village, and there was a wealthy merchant. Now, this guy was the owner of this big mill, Atta Chakki. So, hundreds of kilograms of rice, wheat, jowar, ragi was being crushed to make fine flour of very good quality. People from different places were coming to buy from this shop because only of the reason they were giving very good quality atta. This made the merchant little proud of himself. He began to like behave little arrogantly with initially some of the customers, later with his workers as well. So one day, what happened was in his shop there was one maid who used to come for cleaning every day. So this maid once, while cleaning, found out that a small nut in the milling machine has become loose. Now she told this to the merchant so that he can get it repaired. But the merchant asked her to mind her own business. After few days, two more nuts from the machine began to become loose. This time again, maid informed the merchant about it and even showed him the screws that came off from the bolt. The merchant again ignored this warning as it was not affecting the machine yet. He thought he would get it repaired later and machine kept on running continuously. And then one day suddenly the machine stopped working. The engineer was called. He came, he gave 7 days estimate time to take it, repair it, and bring it back to the mill again. He also told that merchant that had the merchant cared for the timely services of the machine, had those nuts and bolts were repaired earlier, this problem wouldn't have arrived. So the message here is that it's always better to curb the problem when it is small than to postpone it and make it big. Now we see this continuously in all of our surrounding today, where whether relates to health and or you can say even wealth. So your body will always give you a signal before giving that heart attack, but we are not able to read that. Similar thing happens with your finances also. When you think you will take this decision tomorrow, but actually you do not have much of a time left to take those correct decisions. Idea is to take right decision at the right time, neither too early, neither too late, right? So with that little story, I would like to straight away jump to the agenda So the agenda would be, I mean, the focus area for today's session would be like we will be discussing couple of things today. We'll try to understand why do one need a financial advisor. Even before that, we'll try to understand why do even one need an advisor. Financial advisor दूर की बात है, उससे पहले advisor क्यों चाहिए ये समझना है. Now, once we've established that fact, we'll try to understand who is a qualified financial advisor. What is this personalized and holistic financial management, the idea that we are preaching today? How aligning your plans with your dynamic life has to be mapped correctly. The way you kind of choose your partner for next 25, 30, 40 years, you kind of try to understand them in a very detailed manner. So the relationship with your advisor will also be similar. So it's going to be a long term relationship. So what are the essentials would be that should be there in a qualified advisor that along, I mean, जिसकी बात आप एक बहुत लंबे समय तक सुनने वाले हैं. And lastly, we'll try to understand how can financial advisor help you achieve your financial well-being, which should be your ultimate goal. Next. All right. So we will be discussing or try to understand more about what this advisor is and how it works. So uh, now let me ask a very, I mean, not this is not even a question, but still, if people can answer, would be happy to know that. What is common between, say, Pulela Gopichan, Phil Jackson, Ramakant Achrekar, and Richard Williams? If anyone of you guys have heard these names. So, except few, most of us don't know their names, but we know the names of the players that they actually coached. Michael Jordan, Sachin Tendulkar, Serena and Venus Williams, Sania Nehwal. They were all the first or the most influential coaches that gave us these world class players. Say, Pulela Gopichan trained Sania Nehwal and PV Sindhu. Phil Jackson made Michael Jordan. Ramakant Achrekar was the first coach of Sachin Tendulkar. A movie is expected this year on him. And Richard Williams, father, coach, and advisor of two greatest and one of my favorite tennis players, Serena and Venus Williams. There's a beautiful movie called King Richard on Netflix, and one must see that to understand what an advisor or what a coach goes through to build those world class players. So, almost all around us, we see people who have accomplished something, well, had some guide, teacher, mentor, or an advisor behind their successes. Today, we are taking advice on health from doctors. 100 years back, they were not taken very seriously. Today, we are taking help of an advisor to do interior of our homes. 30 years back, there were hardly any interior designers who were there to assist you. Similarly, in case of financial advisor, where people are not taking help of genuine advisor today, would definitely need their help because your money management is getting more and more complex day by day. Or, I mean, to even begin with, do we even understand who is a financial advisor? Because what has happened today, due to too much of loose information which is easily available on social media, people have also become do it yourself investor. There's nothing wrong in that if you are somebody from finance domain or have studied or practiced it, or you can give time and are free from emotional and cognitive biases. But remember, we can do anything, we cannot do everything. So you will have your core areas of work, right? So, as we understand, almost 9 of 10 people who do this do it yourself financial management don't even have a financial background and they're just experimental with their money. Now, their decision making is basically the function of their own understanding, which is influenced from these loose information, mostly social media, or from the help they take from their friends or family, which again is influenced from a social media. Sometimes they don't even realize that they are in a very long game, and short form of decisions won't help them make any good out of their money. Today, we are getting influenced by wrong things and we don't even realize it. There are actors who sell good car to you, but they themselves don't eat those good cars. There are celebrities who sell sugary drinks to you, but they don't even consume sugar. There are actors who encourage you to form teams on these gaming apps, but they never even play these games. Right? Same is with money, where harmful, unregulated advisory is available freely everywhere on WhatsApp or Telegram groups. So over last decade, we Indians have accumulated wealth than ever before. In next 10 years, you all will be creating wealth we have never ever created. And hence, we all need that holding of our hands to walk through these distractions around and be protected against these channels of fake and free advisory which is available around us. So a advisor is basically like a coach that will help you to take decisions in the most optimum manner. Next, so let's understand what is so we understand that there is a advisor who can add value. Now let us understand who is a financial advisor. Now a financial advisor is, to keep it very simple, he's someone who tries to maximize the potential of your finances. So traditionally, what we have seen, these advisor will work in areas like investment management or say tax planning. Mostly, CA helps here. Then there is retirement planning. Remember, choosing four mutual funds is not retirement planning. There are specialists in this specific domain. Then there is a requirement of will and estate planning. This is generally done by a advocate or a lawyer today. And then there are insurance advisors who help you with your life and general insurance needs. So you see, there are different kind of advisor for different kind of needs. Some of them would be addressing more than one areas, but you will hardly find one advisor advising all the areas. Next. Okay, so basically, your need goes beyond a single domain advisor, and you need a one stop solution where your money is managed efficiently. You don't need to break your head among thousands of options that are available in the market. You just need simple solution. You need someone who manages your dynamic life. And that's where the need for a qualified financial advisor arises. We'll discuss about it, but let's have another poll before this.
Absolutely, Apurva. Like you explained that the financial advisor needs to do a lot of parts of financial management. So let's just understand from our viewers now and from our audience now that what aspect of financial management do they actually find most challenging with? It's possible that it is difficult for them to save or just to plan their taxes or just even think what financial goals they should focus on or maybe just navigating investments. Let's understand from our viewers now that what aspect of financial management is actually difficult for them, and maybe they will need a financial advisor for particularly that aspect, or maybe they need an all-round understanding of finances before they even get into the process of getting a financial advisor. So let's just check. Okay, do I have viewers? Okay, we have our answers. All right, so 11% are saying that they find saving most challenging. 22% of our viewers say that navigating investments is a challenge. Investments is something that has been so broad aspect, or it's such a aspect that needs so much continuous monitoring, and yes, it does get difficult. Planning for taxes, one of the major part of your finances that can help you save also and end up putting a burden on you also. So yes, planning for taxes is actually a very challenging for certain people. And then aligning financial goals, there are so many times, Apurva, that we come up to such clients who tell us that I don't know what financial goal I have to even set for myself. So yes, one of those financial challenges, or the most challenging part, can be to first decide what financial goals I should have, and then obviously plan for it. All right. So, Apurva, please help us set these straight.
Absolutely, absolutely. And here we will have somebody who we call it as a qualified financial advisor, that we will discuss about in a moment, that will take care of everyone's challenges where they are facing, right? So we'll discuss on this. So basically, to just let you know, on an average, our life expectancy is around 80 years on this planet. Now, if I divide 80 years into four parts, in our first 20 years, we mostly study, we generally play, and we just goof around. We hardly do anything which we can define it as a economic activity. In the second phase of our life, which is say 20 to 40 years, we will generally have our first job, first car, people will buy their first home, will have our first marriage, will have kids. So in this phase, our incomes generally starts, and since its beginning, it's relatively low as compared to our expenses. So basically, you can say Amdani Athani and Kharcha Ruperia can be defined in this, can be named for this specific phase. And many of us bridge this by taking loans. It could be home loan, it could be personal loan, or it could be a car loan. And then there is third phase. From 40 to 60 years, your income increases rapidly. You will have the best times in terms of your finances in this phase. Had you made less mistakes in phase 2, you will have a second home, a second car, lots of financial assets. You will have kids who would be completing their education, and you will also be nearing retirement around 60s. And then there will be last phase, that is around 60 to 80 years, where you will not have any active incomes. So basically, you just have the phase from 20 years to 60 years. That is around 14,000, 15,000 days to take care of your own dreams, your parents' dreams, and your children's dreams. You would be required to take care of everyone's needs, wants, and desire in these 40 years where you will be earning. So you don't have much room to make any mistakes or errors. Your requirement is not more returns, but more time. And every life is unique and dynamic. And it will, every one of them will go through each of these phases in a very unique manner. And it will require a specific strategy to solve a specific problem for them. And hence, you don't need a general financial advisor who can help you in one or two domains, but a specialist who understand all your phases. And that's whom we call somebody who is a qualified financial advisor. So basically, a qualified financial advisor is a certified expert who has met highest standard of qualification, say like a chartered accountant or a CFP or a CFA or a equivalent education qualification. He would be skillful and experienced holders who has seen more than hundreds of financial lives and help them cross the river. The best ones would have given over 10,000 hours, 20,000 hours of work time experience in this domain. The advice would be free from any biases. Next, can we change the slide? All right. So there are as I said that qualified financial advisors advice would be free from any of the biases. So a QFA, what I mean, a short name of a qualified advisor here, would not offer any investment advice only, but would look at your life holistically. He will share the most effective strategies that would actually work for you, which are tested over time and have been successful. They will understand your life's objectives, what kind of person you are, in what phase of your life you are in, what are your financial behavior challenges, which you yourself don't know, what could be the potential roadmap to address all your goals, and how to walk on that roadmap. Basically, it's like we will check every organ of the body, like your income, expenses, assets, net worth, civil score, how are you managing your credits, etc. So this is what we call as holistic financial management, which is very generally, I mean, you can say, which is very specific and personalized to an individual. Next. Okay, so even before discussing this, can we have the next poll, Sona?
Absolutely, sir. Let's take this next poll. When we're talking about financial planning, personalized financial planning, when thinking about financial planning, which approach do you prefer is something that we are asking our audience next now. Holistic, covering all aspects. When I talk about all aspects, it's about your liabilities, investments, insurance, emergency planning. Everything becomes a part of holistic. All aspects become a part of it. But there's another option that maybe you are focusing purely on your financial needs or specific financial needs. So when you are thinking about your financial planning, which approach do you prefer is something we are asking our audience now. Please go and put your vote over there for A or B. A would be covering all aspects, holistic view towards your financial planning, or you want to be more focused, or you're targeting specific financial needs. Let's understand. Request you all to please go and comment over there if you're finding it difficult to vote over there, or just go and check which option actually you're preferring for your financial planning. Do we have our answers? All right. Let's just wait and see the answers coming in. Um, Okay, 75% want to focus on holistics and cover all aspects of finances, whereas 25% of our viewers wants to focus or target on specific financial needs. It's so important, right, Apurva, that holistic or covering all aspects is so important. If your liability is not working right, your investments cannot work right. How much ever you're going to earn through your investments, your liability is going to drag you down. So yes, an holistic view of all aspects of your finances has to be focused in financial planning. Is that the right way to look at it, Apurva?
Absolutely. So, as you mentioned, it is like I cannot solve the problem of one organ in the body if the all the other parts of my body are infected. You might come and tell me that the heart is functioning very well, but what about those other kidneys and other liver, right? So, if everything is not in sync, working in tandem, working or focusing on one area will not solve your money related problem.
Absolutely. And you would need a personalized understanding also of your financial needs. Apurva, please take ahead.
Sure. All right. So, we were talking about why or what is personalized and holistic financial management. So, this is something which the problem that we believe can be solved by somebody who is qualified enough to understand it. So here, as we have defined, a qualified financial advisor is somebody who has that skill set, appetite, and experience of solving it. So they don't just plan; they actually manage it. They look at your financial picture holistically, balancing between right from starting off incomes, expenses, then there is taxes, then there is liabilities. After all of it, income minus all of this, whatever is pending, that's your savings, and then your insurance, and then comes your investments. Many of the folks begins their financial planning thinking that इन्वेस्टमेंट्स कर दिया, म्यूचुअल फंड्स में एसआईपी कर दिया, मेरा फाइनेंशियल प्लानिंग हो गया, आई एम सेविंग गुड, लाइक मैं 100 रुपीज अर्न कर रहा हूँ एंड मैंने 40 रुपीज का इन्वेस्टमेंट करता जा रहा हूँ, तो आई एम टेकन केयर ऑफ. सॉरी ब्रदर, you have not taken care of all of these areas, because all of these areas require right kind of optimization. Generally, we have seen when we deal with people, there are two types of people: people with problem of scarcity, and then there is people with the problem of abundance. So let me kind of explain these things with two short case studies which will come on your screen. All right. So this is not even a case study. This is just a example that I want to make you understand. So this is somebody who just started his career. The person would have, say, example, the name is Jatin. He's just 25 years old, and he has just started. Working in a tech company. The incomes are good, expenses are less as compared to incomes. But what generally happens in the realistic world when we come across these profiles? So even though the expenses are less than the incomes, the potential savings over 1 or 2 or 3 months will either get diverted into spending into some gadgets, or they will try to indulge themselves into some exotic investments like cryptocurrencies, which they have a limited understanding and control of, or they will indulge themselves into currency or forex trading, or they will get into futures and options because they will want to as per that their thought process, they would want to gain a very high returns on the savings that they are having. I would say that, my friend, even Warren Buffett, who is like a very, very serious investor, he's one of the top five or top 10 richest man in the world who has made his money by investing into companies, has a compounding rate of 20 to 22% over last 40 years, right? So, the approach that these folks take are little too quick to reach wala scheme, and somebody and many times they are just wasting their time, and after a couple of months or years they come back to us telling us that he, sir, when we ask them that you have got such a great income for last 3 4 years, why I don't see that assets have been made in last couple of years, and क्या आपने सारा पैसा खर्च दिया, तो they have got no answers. So what will a qualified financial advisor do in such a scenario? So whenever a person that will come for these kind of consulting, first of all, they will have to understand the person. Who is he? What kind of behavior this person practically depicts? Now, we might see that the person would have taken some kind of loan. So there is some requirement of management of some student loan debt. Also, even before that, we will have to establish कि कल को कोई problem होती है, because he's in a tech sector. कल को if he loses that job, has he established his emergency fund? So that could be another goal that will kind of establish for him, for like to address in for him to take care of in next couple of months. And Lastly, there could be another goal wherein we would want to initiate a investment portfolio for his long term growth, right? So these would be the goals that would be established by a qualified financial advisor, and then there would be a customized strategy in order to achieve each of these goals. So once these goals are achieved, then over a period of time, new goals come into in one's life. So there is again a new strategy which comes into the picture. Say these three goals have been taken care of, 2 years 3 years down the line the person would want to buy a car, then there will be a strategy required to plan for that kind of investments, whether there could be some tax benefits, would their salary structure give them those kind of benefits. So hence we would look at things in a very holistic manner. Now this was the problem of where there was abundance. Now let's understand for in a next case study for somebody where there is a problem of scarcity. So generally somebody we expect that somebody will be in his 45th year would be doing very well in finance. Definitely their incomes are very good, but we actually once we see in their finance ना, तो पूरा 45 ईयर्स तक बस एक घर बिल्ड किया है और पूरा जीवन 20 साल से शिद्दत से सिर्फ लोन दिया है, जिसमें 1 रुपी का घर था और 3 रुपीज उसका पेमेंट किया है, राइट? सो 1x के पीछे 3x का पेमेंट हुआ है, and the person has just accumulated one asset, and mentally he is so much conditioned. At this phase, he's saying that I'm thinking of buying another property, taking another loan, and I'll pay it off in next 15 years. So basically, they are not even thinking of that they are going to be retiring one day, and they'll not be having active incomes, and they will be requiring those phases where they'll need those passive incomes. So a QFA on another end, when they meet these kind of people, they will first of all establish a retirement goal, or they'll establish a retirement savings, so that a person start to save towards their retirements. Secondly, there is very important risk that needs to be managed, which is of healthcare. Healthcare today is expensive, and it's going to be expensive even more tomorrow. So you require good health insurance plans, which generally a QFA will try to help the person to take, and it will not be something which is marketed heavily by these insurance companies, but this is would be something that actually fit in with the lifestyle of that person. So these could be the goals: health plans and say retirement savings. And there would be a customized strategy that will be designed by a QFA to address these goals of these of these people who are seeking certain help. Next, okay.
Very good.
So aligning plans with life changes. So we all know that we know in the sense we all have experienced this, that our taste is always more than what our wallet allows. And let's kind there is one very famous story which can explain this in even better manner, like why we do behave in a way we keep on making those mistakes knowing that it is actually a mistake. So almost in late 18th century in France, एक मशहूर फिलोसोफर थे, डेनिस डिड्रो, जो like he's actually famous for writing a version of an encyclopedia. And initially he was not that rich, काफी तंगी देखी थी, and धीरे 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 he was like building his career, and actually he had got a very good fan following. One fan of his work was Russian Empress Catherine. Knowing his situation, she actually bought his entire work, entire library, at £1,000, उस समय के £1,000 would be equivalent to a $65,000 in today's sense. So उतने रेट में उन्होंने बेच दिया. इतना सारा फंड्स आते ही he became excited. So first of all, what he did was he bought a scarlet robe, यानी कि एक रेड गाउन लिया. जैसे आपने वो यूरोपियन मूवीज या सीरीज में देखा होगा, वो रेड कलर का रोब पहनते हैं, एंड दैट वाज कंसिडर्ड वेरी वेरी यू कैन से important in that specific society. Like important people will have that kind of rose with gold linings and all. So आने के बाद में, बिकॉज दिस रोप वॉज सो एक्सपेंसिव सो ब्यूटिफुल, तो वो रोप को जहां पर भी या गाउन को जहां पर भी अपने घर में रखते थे, तो आसपास की सारी चीजें जो थी वो एकदम आउट ऑफ प्लेस लगती थी. उन्हें लगता था यार दिस इज ऑड मैन थिंग विच इज देयर, एंड बाकी सारा फीका पड़ने लग जाता था. तो उन्होंने सोचा कि चलो अभी घर में थोड़ा अपग्रेड करना पड़ेगा. तो उन्होंने क्या किया, लाइक रोप से मैच करने के लिए उन्होंने कुछ चीजें बाई करी. सबसे पहले उन्होंने मिरर बाई किया, फिर एक मैचिंग रग बाई किया. उस रग के साथ मैच करने के लिए उन्होंने कुछ स्कल्पचर्स बाई किए. फिर स्कल्पचर के साथ उन्होंने मैच करने के लिए कुछ फर्नीचर बाई किया. देन ही बॉट चेंज्ड हिज लाइक एंटायर किचन फर्नीचर, and later he became bankrupt because he was spending without even realizing that he has very less money which is left. Later he wrote this entire his behavior in his essay, जो आप पढ़ भी सकते हो गूगल पे, regrets on parting with my old dressing gown. He wrote about this disaster. Rather than being or making happy, he actually felt miserable. This spiral effect is also called Diderot effect, which means one purchase led to another purchase. Like you bought a t-shirt, now you need a matching pant for it. And after you buy a pant, now you need a matching shoe that will match with it. I too have been victim of this. So it is very essential to, I mean, responsibly map our capital's use correctly. So your qualified financial advisor's job is nothing but to align your use of capital to what's important to you. That's it, period. So a QFA will actually prevent you from misbehaving with your money, and your life is actually not static. It is actually always changing, right? So like when we say we are aligning our plan with life changes, we are saying in a dynamic plan in a dynamic world with a dynamic goal will require a dynamic strategy. Dynamic in this context means ever changing. So, say you plan to invest for your kid's future. You're not sure whether he or she will study in India or abroad. So, in what currency should you save the funds? Should be in INR or should be in dollars? What should be your contribution? How much of education loan is fine? What could be the tax benefits? And that's how you actually address just one of the goals. When you decide, I mean, think on all of these points when you are preparing for just one goal. And every goal like this will need certain personalization. So your plan also needs to be dynamic and changing as per your changing lives, be it marriage, career change, or retirement. Next slide.
Apurva, before we
Uh,
move ahead, let's take one poll. So, like you said, a
sure.
financial advisor helps you with aligning to do the multiple changes that may you go through, be it your personal life stones or something happening overall in your personal finances. Let's understand if you are if all, for all our viewers, if you all are seeking for financial advice, what would you be your priority area? Why do you think you would need a financial advisor? Let's get started with that. We have understood that we need a financial advisor. They're important to us. They're going to help out with a lot of things. Let's understand that why. What is your reason to maybe go to them? Are you going to go to them for managing your debts? Do you want to start building emergency funds, and that's why you think a financial advisor can help you out with it? And then growing your investments. Obviously, investments is something that is always on the top of the mind when you think of an advisor. But yes, there are a lot of other aspects also. That's what we have understood from today's session also, that there are a lot of aspects, and maybe growing of investments stays as important as needed. But yes, there are other aspects also that need to be focused on. So viewers, please answer over here that why you're seeking financial advice. Now that you know that you need a financial advisor, what is your priority area? Let's understand the answers that we have received. All right, so 25% people are saying that they want to manage their debts, and that's why they would seek financial advice. Building emergency funds, 33% people believe that they want to go to a financial advisor for building an emergency fund. And then growing investment again stays on the higher note, where 41% people are saying that yes, they need to first grow their investments, and that's why they need a financial advice. Go ahead, Apurva. It's so true, right? Like managing debt has become a priority these days, and then obviously creating emergency funds. If COVID has taught us anything, is like you have to create an emergency fund first for yourself, and it's a number that people have been playing with, but there are multiple ways actually to actually understand how much should be your emergency fund, and that's why definitely you need a financial advisor.
So true. Like many people that come to us today, we generally are seeing they are falling into the trap of what we call as debt trap, wherein they are taking more and more credit. Even the RBI data shows that to us today. In fact, they had to intervene with some regulations that could limit those personal loans that were given, because that was kind of going beyond an abnormal levels. And that is what we can see. Even this is actually reflected in our clients data when they come to us. So you absolutely and correctly mentioned that debt management is the very important thing, and one has to manage it very responsibly. So moving ahead, I would say that a QFA would be required to help you in this ever-changing situation and providing you a timely solution. Next slide. This specific slide, I actually started with one quote that you all might have heard of, that show me your friends and I will show you your future. So a QFA is your that you can say a friend, that long-term friend that will actually add value to your financial future. I'm pretty sure everyone here will have seen at least one doctor's file in the family member, which has got all the history of treatments and medications there. So basically, we understand that what gets measured actually gets managed. Similarly, a QFA will record all the interactions and of the conversation that happens with the client. They will record all the data and monitor any changes that has happened from previous instant to the latest instant, and hence he will also become your record keeper, so that after 5 years you want to know how the advisory has changed or arrived over the period of different intervals with your changing of situation. You will actually come to know. Next slide. All right, perfect. So now, as we understand that we are talking about long-term relationship here, right? So this will not, I mean, whenever you're dealing with an advisor, it is not a one-time action, or the relationship is not just transaction specific, but on continuous basis. So whenever you're dealing with a QFA, So after creating a specific roadmap or a strategy for you, he or she will do periodical check-ins. Remember, these are not those sales follow-ups, but check-ins to ensure that you are on track. And if you need any help in bringing your problem any proactive solutions, he or she would be available on your demand at your comfort. The way your family doctor knows half of the things about you even before you tell him what's the problem. A long term and a dedicated QFA will know your need and challenges. You will have more comfort and trust on him to help you navigate different and difficult situations in your life. So I had cases where client went into depression for almost 6 months. He had all negative views for anything or everything, including his family and his money. But you must stay positive with, uh, we would always stay positive with our clients, because we understand this could only be a passing phase and they require our support. And that's how a QFA will comfort, and that's how trust is built in a longer horizon. Next, all right. So this would be the last phase of our interaction today. So I actually learned this from somebody, uh, that at the end, let's figure out what actually matters, or what question is an advisor trying to solve for his client. The client just wants to know that, am I doing okay? Do I have enough? How much is that enough? What do I need to do today to get to my enough? If I am on track, what I need to do? If I am off track, what do I need to do? So, choosing a qualified coach or an advisor who can help you to take these financial decisions so that you are confident and comfortable to work with them for next 20, 30 years of time with them. This will allow you not to make your financial decisions, or taking your financial decisions in doubt, but much more confidently. Lastly, remember, there are no free lunches in the world, but at least you can check what you are eating. So, a good advisory will never come free to you. You will have to pay for it. But the cost would be very tiny relative to the value it can add, so that someone is accountable to actually get you peace, stability, and eventually growth on your hard earned money. If you can't find somebody who tick mark all the criteria that we have discussed, you can always connect with me or the One Finance team who can actually do this for you. With this, I would like to rest my case and open to any Q&A against having an advisor or any specific questions that you might have.
Hi, Apurva. Perfect. We've been through quite a part of the session. We have covered why you need a financial advisor. You have defined the qualified financial advisors for us, why and how their expertise, they have an expertise to go through your financial journey. We have talked about personalized and holistic financial management today, how we can align our plans with life changes, long term relationship, and ongoing support with them, and finally achieving financial well-being. All right, so it was a superb insightful session. We have a lot of questions. Apurva, I request you to please take them for us before you leave the session. Just in case you were not able to see the session, this will be available live on the One Finance website, on the LinkedIn and the Twitter platform. Whenever you want, you can always go and check it out. And Apurva himself will also be sharing it. So if you want to follow him on his particular pages, you'll be able to do that. All right, so let's start taking questions. We have a question with from Priya. Can a financial advisor help me with debt management? Yes, this was covered today, Priya, that a financial advisor can help you with debt management. Apurva, you want to take that particular part a little bit again?
No, I mean, yes. Like when a financial advisee or somebody is trying to understand you holistically, they will understand your liabilities also. So if we see that your liabilities are beyond certain or our comfort zone, and it can bring certain like stretch to your routine cash flows, the person will try to address that thing first. So see, we are not against having any liability, but there we have a definition of, say, a good liability and a bad liability. So we generally understand what kind of liability that person has. If it is good enough, then if in a controlled manner we would allow that. But if it's a bad liability, which is gonna eat away or your money, and it will also be depreciating asset, we'll try to get rid of it ASAP. So a QFA will definitely help you with managing your debts. Sometimes it could be even personal loan debt or credit card debt. We have seen people stuck very badly. It has impacted their, I mean, CIBIL score like anything.
All right, Priya, that's the answer from Apurva sir here for your question. All right, let's take another question. Nisha is asking, can you explain the different fee structures available with this financial advisors and how I should understand that how much I should be paying a fee to these people to get the right advice? How to understand this? Does it mean that you have to pay premium to get a premium service?
I will not say that you will have to pay a premium to get a premium service, but definitely it will cost you. There are different models which are available in the market. You have to figure out which model you are comfortable with. Uh, if you talk about, I mean, Indian context, there are like RIAs, which is like a regulated entities by regulators who are there to, I mean, see if things or if the advisory is going in the right manner, and they are kind of accountable and answerable to these regulators. But you will also see you getting some incidental advisory from your mutual fund distributors as well, wherein they may not be charging you directly, but a portion of those, I mean, any products that would they would be recommending, or maybe say an insurance person would be recommending a term plan to you. So a part of the product, I mean, that you are gonna be paying as your premiums or your investments, a very tiny part will definitely go to them. So that these are two models by wherein a product based commissions are given, or like you upfront pay a fees to an advisor, and they will take care of your needs.
All right, Apura, thank you for the answer over there. We have another question who's trying to ask here that how much knowledgeable I need to be to understand what the financial advisor is actually telling me. How much I need to learn, how much I need to study, even before having an advisor with me. This is a very interesting question, Apurva. Actually, everyone is so much is available again, first on the internet, second everybody thinks that they know their finances very well, but it like a lot of things breaks to them when a financial advisor says, oh, you were thinking this is doing really right and this is not doing right. It's always a cross questioning happening over there. So how much knowledgeable actually you should be to understand how much this financial advisors can actually cater to you?
Okay, so I would say that if you're somebody who reads a lot, or somebody who likes to see what's happening around, very updated on the current affairs, then I guess you are a person that is good enough for you to work with any advisor. Because practically, what is required out of a client is not the technical knowledge, you knowing everything, how things are happening, but more of logic that, okay, this is how the direction is getting built and this is how it is going to be addressed. So that understanding part, the logic part, is what is expected out of you. We are not gonna, as an advisor, ask you to do those compounding, let's do math for you, because these are, I mean, these could be done by machines. Important thing is that do you understand that? And to be too honest, it is not that complex, it's only logical. But again, it's said now ki common sense, we it is not very common. So I would say that please do not be dependent upon social media content, because it is very I mean incomplete information, because no one can teach you a simple thing in those 30 seconds, 1 minute, or 2 minutes kind of thing. So always prefer books over watching any content. Good, read good books. Good. There are very good authors, Indian authors, authors who are like outside of India also. So just read about those concepts, and that's how you will be able to build very strong logic. And then when you start to work with a advisor, it will be very beneficial to you, because now you understand कि ये एडवाइजर मेरे साथ ये कर रहा है एंड ये मेरे लिए जरूरी है. लाइक अ योगा टीचर विल कम एंड टेल यू दैट दिस इज, इनिशियली आपको नहीं समझ आएगा, बट वंस यू स्टार्ट सीइंग दोस बेनिफिट्स यू विल बी एबल टू अंडरस्टैंड, अच्छा ये किया था इसके वजह से मेरा अभी ये पेन कम हो गया है, या मेरा बॉडी अभी ये मूवमेंट अच्छा हो गया है. सो यू हैव टू ट्रस्ट देम, you have to have your own logic ready to work with them. That is all what we need. Nothing, and an open mind along with patience. That's it.
Oh, absolutely. Like you started talking about today's session that first you need a coach because they have that expertise. Then you go to the process of understanding them, trusting them, and then building relationship with them. And then over time understanding that yes, this financial advisor is right for you or not. And then you can start trusting them. Yes, you need to read a little bit about it. You need to know a little about what you want to or what you need, but eventually, the most important answer over here is even if you don't know about it, that's why these financial advisors are also entering in to help you out over there with your personal finances. And obviously, when it comes to your hard earned money, you should spend a minute at least to understand. What these financial advisors are trying to give you. It's your hard earned money, and I think it's you should give some time to that particular aspect, that is your personal finances. So definitely, you should have knowledge, but even if you don't, these financial advisors are there to help you out. Just take an extra effort to understand what they're trying to put in front of you, like you may do with your other coaches of health and all, where you go home and google like whether they gave you the right advice or not. Am I right, Apurva, over there?
Absolutely, ma'am.
Thank you. All right. Let's go with the next question. So, Preetham is asking, how do financial advisors add value in ways that automated tools and software cannot? So, absolutely, AI is picking up. There are a lot of calculators, tools, softwares that can help people create charts and charts of Excels and data that you need maybe to handle your personal finances. But I think, Apurva, I just want to give a start here that what's important is these tools don't have that personalization that you're looking for. Will that be the answer, Apurva? Yeah.
You are absolutely right. I mean, I can only counter in this manner this as AI will definitely replace many of the human functions, but anything which is associated, which is so dynamic as a human life is, so anything around, say health or say wealth, these things are very dynamic. It changes day on day, month on month, quarter on quarter basis, because these are, I mean, defined by your lifestyle. These are defined by your way of spending, way of of the way you are earning. There are so many things which AI cannot predict or advise. It can be a very useful tool to take support of. You can try the way I mentioned to you, that in order to build a logic you can use them as tools. The way there are books which can be used as tools to upgrade. You can use AIs to build understanding of things which you are doing with an advisor. But till now, I don't know about future, but as of now, AI has only been a helping hand to us, not only investors, even an advisor. It makes many things easier for us, but I'm not sure that in future I would want to place my bets basis what a robot is telling me.
So true. All right. I know we have exceeded our time. Let's just take this last question. We have this question from Charmi that asks that how much monthly or yearly should I connect with my financial advisor, or should I always be in touch with them?
All right. So basically, you need whenever you will start your journey working with your financial advisor, in the initial phase, you might feel that you require more connect with them, because there will be lots of things that would be required to be discussed. There would be certain roadmaps that would have to be created. So initial level pay, you will kind of try to connect with him for like couple of times in the initial quarter or initial 6 months. But once you have that confidence, once you have started, what would be requiring is just a simple tracking of your entire financial life. Even if you're meeting your advisor quarterly or once in 6 months, that would be enough, only to discuss what has happened after you met him last, what things have changed. And if most of the times, or at least 70 to 80% of the times, nothing would have changed in your life in terms of your finances, only 20 to 30% of the times it would have been something which you have never thought of. So initially it will be like maybe initial 3 4 meetings where you will want to know more and more things, and then it could be quarter on quarter meetings, and then it could be once in a 6 month kind of a meeting. Remember, we are talking here of journey of next 20 to 30 years. So I'm talking about from that एस्पेक्ट दैट फिर एक बार चीजें ट्रैक पे आ गई, तो फिर आपको बस यही करना है, या फिर अगर कोई स्पेशल इवेंट आ रहा है आपकी लाइफ में जो आप चाहते हैं कि एक स्पेसिफिक टाइम से पहले डिस्कस किया जाए, तो जब भी वैसा कुछ होता है, यू कैन ऑलवेज कनेक्ट विद एन एडवाइस.
Absolutely. Life milestones, getting married, having a new job, change of location, anything you definitely need to go check out with your financial advisor. Yes, and it's a long term relationship, but an ongoing support is always available with these financial advisors. You should always be connected to them. Always doesn't mean that you have to always keep calling them or messaging them, but yes, you need to connect with them when there are some life changes or some life milestones that you've achieved or going through, and you really would need help financially over there. All right, so today's session was extremely insightful. Thank you so much, Apurva. You can find the session online on the One Finance website, on LinkedIn and Twitter. And any questions you all continue to have, you can always send it to us, DM us, tweet us, anything will be available. Our financial advisors will be available to help you out. Do not forget to follow One Finance on all these social media platforms. And if you want, you can always get connected to Apurva sir also on his social platforms. Thank you everyone for watching today's One Finance Masterclass. We'll connect back soon with you all again with the next masterclass. And this time the focus is going to be tax planning, ITR planning. It's going to be the 1st of June. And absolutely everyone is going to get their Form 16s in their hand, and everyone have to plan their taxes, or ITR planning is something that you'll have to focus on. And that's going to be our next focus, our next masterclass. So see you all soon. We'll be reminding all for the next masterclasses soon on our social media, and we'll connect soon. Thank you so much again, everyone, and have a great day. Bye bye.
Thank you.